Very interesting close as this asset gets a bearish formation in the daily time frame and a bullish one to react during the after hour session. The true test of strength will be upon tomorrow's trading session. Let's go over the charts for a potential edge. Welcome back to the channel on this happy Monday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill them, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol NVOS, and what we're observing here is actually the daily time frame. And the reason why I have this up right here is because I would like to display to you the total range that it looks like we're kind of caught up in, right? This looks like the chop zone, right? This would be the 181 top with the bottom of about 142, and of course, you know, we have the outliers landing, you know, down here at 130, and then we have this crazy wick up here at 212, right? Yes, we still have those, but to recognize where price action is kind of sitting within is generally the 181 to 142 area, and we are kind of in a demand zone, right? So usually what happens upon demand is, you know, we get an upside, right? Now, this is what I meant during the what I meant here during the introduction is that we definitely got this downside here, forcing actually a bearish engulfing candle formation after a run up. So this is validated, right? The thing is what happened after. So let's go ahead and take a look at the 12-hour, because the 12-hour time frame displays to you in TradingView the after hours trading session, right? The daily time frame would only give you whatever happened intraday, whatever happened during the trading session. Traditional hours, right? So 12-hour time frame, check this out. 12-hour time frame here gets a bullish engulfing, right? So now you guys know that yes, the upper time frames usually carry more weight. They have a bigger strike rate. I get it. But remember too that the lower time frames usually cascade into the larger time frames, okay? So notice that we got a 145 close at the daily time frame, right? And then we actually got a 151 close upon the after hours session, right? So this is already bouncing from that bottom side. So it's looking not bad. And it is already at a relevant resistance, okay? So now this resistance actually is a bit of a range here, but it is perfectly sitting at that 151 resistance level, okay? So I'm going to go ahead and note it down. I'm going to go ahead and note it down here as I would like for you to, you know, be aware over these resistance targets, right? So let me see if I can actually tighten this up any more than what it is. Okay, so I guess, yeah, the resistance range could be 151 to 152, so not that big of a difference. Okay, so yeah, so let's go ahead and touch down with some formation theory here, because I am seeing something that could, yeah, I'm definitely seeing it actually. Wow. Okay, so let's get the moving averages out of the way, and let's focus here on the hourly time frame. That'll do it. Okay, so let's draw some lines. All right, so these are going to be the lines we're drawing here. Lines, right? So yeah, it could be something like this, right? I'm not sure that this would be it. Don't think so, actually. I think it better sits like this. Well, that means that it does have kind of a ways to go still, right? So if we are facing a falling wedge here, then the probabilities would be to continue on to the upside here, right? And face the resistance of about that 154 cent zone. Now, 154 is curious because we just identified a potential 152. So 154 or 153 is actually landing. Let me see. Oh, man. Yes, it definitely is 154. Okay, let me show you why. Okay, we're going to have to adjust this range here to 154 to 151. Why? Because of the opening of this candle, the opening of this one, the closing of this one, the wick low of this one. So lots of contact information within that 154 cent zone. So now, yeah, see the importance of looking at it in several ways, right? So upon the next hourly candle, sure, there is a potential here of touching down to that 154 or 153 area. Okay, so And I'm sorry, what is the opening of this? 148 and closing 148. Okay. And yeah, that would go along pretty nicely with the 12-hour time frame after hours bullish engulfing, right? It could lead to a continuation to the upside. I will warn you that this falling wedge does not appear to be ready, right, for breakout at all, right? So I mean, it can do it. It can, right? But I just want to warn you that it does not appear to be ready. The good thing here is that we're actually following the traditional rules of a triangle, right? So it is actually getting the dropping volume here, or the declining volume with declining price, right? So it is getting that in a sense. So at least that is in order. Okay, so let's go ahead and pull up our momentum and see if we can actually display anything of use here. So the hourly time frame, yeah, let me use, I'm going to use this here. So the hourly time frame is already creating a bullish crossover, right? Let me see the 30-minute. Yeah, 30-minute is, I mean, it is very, it is still in the bearish controls. I'm sorry, it is still in the gravitational zone here. It could face a downside, but let me see how much thrust we have. Right, okay, so yeah, there is a tiny, tiny bit of a downside here. I expect this to come down to 150 before a continuation to the upside based on this gravitational pull here, the 15-minute bounce from the opposing side's gravitational zone and SMA 14 before a continuation. 30-minute time frame here then would get pushed up to the upside, and thus following through with the hourly time frame breakout from the SMA 14, right? And not only that, is that it is kind of facing an inverse head and shoulders on momentum. And I will say something, actually, momentum tends to play out these formations a little better than price action does. Although price action is sort of displaying it, it's more apparent here in momentum. Right, so let's look at the bi-hourly time frame. It is actually it's the RSI signal is just at the border of the gravitational zone, but it is pressuring the SMA 14 upward. Right, so this is making me feel that it is going to face an upside here to that 153, 154 top, and it could be a very short-term upside. Right, so let me go ahead and identify that, because all the time frames are definitely facing some type of upside here, right? So, and I want to just identify where there could be a resistance. No clear resistance. I will tell you that, but it is facing several upside signals here. And in fact, let me see the 4-hour time frame. Where did we close this? So this was closed at 151. This opened at 151 as well. Okay, yeah. So to my visibility here, I can definitely see a potential short-term retracement to down to 150. Right, 149 to 150 could be the range here before a continuation to the upside and resisting from 154. The thing is that since this is not quite ready, there could be a drop from 154 here all the way back down to 144, and then we will continue doing this little dance here. Right, remember that this is the hourly time frame, and I mean, this equivalent here is the is 1 day's worth of price action, right? This right here. So you can see that upon tomorrow's price action, which would be around here-ish, you can see that that would already take us to around 50%, to around 50% to the apex of the triangle. So, and as you guys know, if you watch me often, then you'll know that 65 to 75% to the apex of the triangle, it's usually the area where this formation would break out or break down. This is a bullish formation. It is suggesting strength towards the bulls, but I will say that it can be played both ways nonetheless, okay? Just I want you to remember that. But for now, you know those targets, you know the risks here, right? So please go ahead and remember to get enrolled, right, in the ARC Masters Trading Course team. I've opened up another 30 seats, and they're already getting filled up. So ARC Masters Course at Gmail. This is a 16-week mentorship program with me, right? And I said to my students that I wouldn't consider doing anything beyond my tracks 1 and 2. But now I'm on tracks 3, and I thought 3 was going to be the end. But a lot of people from track 3, a lot of people who wanted to get in track 3 couldn't. So now I opened up track 4, and that's getting filmed. Okay, but I really have to stop doing this, right, in order for me to continue my trading endeavors, right? And this takes a lot of time from me, and master students deserve it, right, team? So yeah, I just want you to know that this is it is an opportunity for you to kind of take on, right? And I'm not going to speak about this inverse head and shoulders just yet, because this has a massive topside target of around like 182 to 190 or something. So let's just kind of get over this formation first, and then we'll talk about it. Okay, so I'm just going to make it a little bit larger here, team. So please remember to get yourself enrolled, and I'll go ahead and pass you the or send me an email. I'll pass you the syllabus, the disclaimer, and all that good stuff. Okay, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios. Yeah.